Hey guys, Louie here. I'm going to talk about my purchase of paper silver using the ETF known as the SLV in just a minute, and how I wrote some covered calls on that. Before I do, I just want to draw your attention to Ebates one more time. If you haven't signed up for that and you're looking to get some free money, go ahead and click on over to Ebates. And these are my purchases and my last big fat check from shopping trips at Macy's, Petco, and eBay. No, not in the coins and bullion area on eBay, but everything else you buy, from computers to socks. I bought a pair of shoes at Macy's. And sometimes they have double, triple, quadruple Ebates. It's as simple as signing up and log into Ebates before you click over to your favorite website. If you're going to buy cat food over at Petco, just go into Ebates first, click into it, and you will also be getting a big fat check. So with that said, link below on that, and let's talk about the SLV. Okay, so as you know, we had a plummeting spot price recently. Here is a 15-day chart where a spot has dropped from 1550 to approximately 1450. This morning, which is August 16th, it is up a little bit, and we don't know if the slide will continue. It seems that it might have a date with 14, but I don't know. I do track the ETF known as the SLV. The SLV is the paper market, and most of us do not purchase paper silver, because obviously if you don't hold it, you don't own it. But with the drop in physical silver spot, the ETF that tracks it, which trades for about $1 less than the spot price, dropped from about 1430 down to about 1360 or something. I'm having trouble reading this chart while I'm recording this, but we had a significant drop in the paper traded SLV, which you would expect. Now, I have been looking at ways to generate fixed income recently, because I don't believe in the stock market at this juncture, and this is what I did thanks to a recommendation from a friend on YouTube. I have written covered calls on the SLV. I'll be right back. Okay, so what is the first thing you need to do to be able to earn income on silver? All right, if you don't mind owning silver, and you don't mind temporarily giving up the upside potential for silver, you can write a covered call. What a covered call is, it's a way to give away the upside potential on your silver for a limited period of time, so that if you have the underlying security, the SLV, you own the paper silver, you can sell the right to appreciation from any point forward for virtually any length of time, and receive income immediately for doing so. So because I do have some investable cash that's out of the market and out of real estate, what I did was I went into the SLV and I bought 1,000 shares of SLV at $13 and change. All right, so let's call that you know, a $14,000 trade. I have that in my account. Now, I do bear the risk of the SLV going down to $13, going down to $12. If spot melts down completely, then I can lose real money, right? But given this level in the market, I'm really not concerned about that, and I have lots of physical silver anyway that I hold long term, so I really don't mind holding the SLV. I think it's kind of one of the no-brainers in the world to put some of that into your portfolio in addition to your physical stack. So since I don't mind parking some cash in the SLV for long-term appreciation, I bought 1,000 shares of it. I was then able to go over to the option chain and sell calls on that. So if you can see the screen I'm going to post here, you can pick the duration that you'd like to sell the right to your upside potential: 1 month, 2 months, 3 months, a year. I believe those are called leaps if you give away the upside potential for a year. But what I chose to do is sell the upside potential on my SLV at a strike price of 14 or greater. So I bought my silver in the mid-13s, and if silver appreciates above $14, those calls that I sold will be in the money, and I will have to forfeit any upside I have on my underlying stock. But I have appreciation between the mid-13s and up to 14, and that'll get us pretty close to where we were before the big drop. So what do I get for that? So this is August. I sold September, October, November, December. I sold 4 months of upside appreciation on these calls, and for that I got a check. I got a transaction in the neighborhood of, I think it was $500, and I'm not looking at these documents as I'm speaking. But so I invested about $14,000, right, in something that I feel is secure, and I temporarily sold the upside potential on the covered call for about $500. I believe I did that math, and that is about a 4% return over this period of time. That would be 12% annualized, I think. So don't trip me up with all the small numbers, but generally that is what's happened here. I parked some money in the SLV. I sold the calls on it. After December, if those calls are not in the money, if the SLV is not trading above 14, they will go worthless, and I will then again have full rights to the upside potential of my SLV. Okay, this may sound like gobbledygook to some people, but if you have a little experience with stocks, some people do sell covered calls, and this is a way to generate immediate income. When the price of silver is so low, you don't mind owning it and taking the downside risk. You can turn around and sell the upside on a time-limited fashion and generate immediate income. This is how I made approximately $500 yesterday, and we'll see if this proves to be a good strategy or not. I know at least one other friend of mine is doing this, and sure beats a 2% bond. However, it does carry downside risk on the drop in spot. If spot goes up to $16, then I will take the first 50 cents of that, as profit, but I will not participate in that the remainder of that move. So that would be the bittersweet punishment for such a thing. So there's always an angle, and this is one way to turn your silver into a cash machine, if you don't mind owning the paper silver, in addition to your physical silver, which I have plenty of and have been losing money on it just like everybody else. So this is kind of a nice twist in this kind of a market. Let me know your thoughts, or if you have questions, and I will try to answer them. I'm sorry I got a little bit in the weeds. You could, of course, use your stockbroker to transact this for you. I did mine on E-Trade. Total commissions were $15 for this trade. All right, everybody. Louie signing out. Have a great day.